YouTubers, this is Kevin, your financial freedom architect. Today I want to discuss three different types of insurance. I'm bringing you guys this video today because I lost a colleague of mine earlier this week. So I thought it would be best to share this information to help you and your beneficiaries when that time comes, because we never know when that time comes. So the first I want to talk about is term insurance. Term insurance covers the policyholders for that term. Whether it's 10, 20, 30 years, that policyholder is covered for the term, for that term, in respects to their face amount. And the face amount could be 100,000, 250,000, 500,000, etc. So for example, if that person passed during the term, that policy will be paid out to that person's beneficiary if the death aligns with the terms of that policy. However, if the person dies after the term, the person is no longer covered, and their beneficiaries will not receive any money if that person dies after the term, because the term is over, is lapsed. And all the person's premium payments that have been paid out over that term will be not. It will just payments to the insurance company. No benefit whatsoever will go to that policyholder after that term. So this type of insurance I really do not advise, because it's a guessing game. You're betting that you will pass, essentially. You're betting that you will pass in that term, but if you outlive that term, then you're losing money. So the second type of insurance is whole life. And whole life covers a policy owner from the time they have the policy up until 100, and some companies insure up until 120. So you can get the policy today, whatever age you are today, and you're guaranteed to be insured up until you're at least 100. And typically what insurance companies do, once you reach the age of 100, or whatever that number is, they'll refund you your premium payments. So at least you'll get something back, opposed to term life insurance. Another benefit with whole life is what they call cash value. It's a reserve that builds up over time, typically after the first 2 years of the policy, builds up over time with interest, so the policyholder can benefit from that amount of money, whether it's in the form of a loan, or if you reach a financial hardship in your life, you can tap into that reserve to pay your premiums, or you can attach a rider to the policy. So when that rider goes into effect, and the rider is essentially an attachment or an addition to the policy, when that rider goes into effect, let's say 20 years from now, you can say, okay, I want to stop making premium payments, and I want to use the money in my cash reserve to pay my policy payments. So that's a benefit to those who invest in whole life, invest in a whole life insurance policy. The third type of insurance is final expense. This is in addition to the previous two, which are pretty much used to be a blessing to your beneficiaries, to your family. The last one, final expense, pays your funeral, burial, or cremation cost. Essentially is not to be used as a blessing to your family. These monies, starting at $1,000 and sometimes going up to $35,000, will just be used for your funeral, burial, or cremation cost. Some people say, should I have final expense if I already have whole life or a term policy? I say yes, because oftentimes when you deliver your policy to a funeral home, you're giving them a blank check. And you really don't want to do that in a time where you're really not thinking about money. You're more so mourning for the loss of a loved one. So you don't want to give a business a blank check and say, go ahead, deal with it, and reimburse me or refund me back the difference. The final expense policy is used to pay for all of the funeral, burial, cremation costs, so you won't have to expose your face amount or your policy to that funeral home. Oftentimes, we have cell phone insurance. we have car insurance, we have homeowners insurance, and we never use these policies. But with final expense, you will use them because we all, sadly will pass one day. So to reiterate, you have term life insurance, which covers you for that term. That's why those policies are extremely cheap, because the insurance companies are hedging the fact that if you're 20 today, 9 times out of 10 you will not pass in 20 years. So they're just taking those premium payments and investing them elsewhere, because the bet is that you will live 20 years from now. So term policy covers you for that term. When that term is over, you'll be older, and if you try to renew that policy, those premium payments will be higher. Whole life covers you from the time you have the policy up until 100 or sometimes 120. You have cash value, and you're guaranteed to receive some type of benefits, whether it's the whole face amount or the return of your premium. And final expense covers your funeral, burial, and cremation cost. It protects you from exposing your other insurance policies to the funeral home, and it pays for your funeral, burial, cremation cost at relatively low premium payments per month. If you have any questions, feel free to email me at the email below. If pertaining to real estate, taxes, insurance, financial planning, credit restoration. I'm bringing you guys this video today again because I lost a colleague. It was sudden, it was unexpected. The guy was healthy, and today he's gone. So you never know when that day and time comes. So I highly advise, if you don't have some type of insurance, to get some type of insurance, a policy of some sort. Till the next time, are you on a path to financial freedom?